quite nostalgic for me to actually be here tonight. I spent 3 years with Placer Pacific, as you heard. I was actually located in Goldfields House around the corner, and the basement here was our Friday night watering hole, which was actually quite good because when the band got up to do its sound check, you knew you'd stayed too long and you're in trouble when you got home. So it was a good cue to leave. I'm here to talk about Kimberley Rare Earths, and I'm going to focus this presentation on the Cummins Range project, one of two projects that we have. That works, good. And skipping through the disclaimer, just going to talk a little bit about the company in brief for us before we get into the project, and a little bit about our stock price because it can't be ignored that where it is at the moment. We, like Lithex, listed in May, on the 18th of May, and we had a 20-cent stock price at that time. It was a fantastic IPO, one of the better ones probably this year, with $18 million raised into a company with the Cummins Range project as its only asset, 25% of it in fact. It has since, the share price has since declined down to around the 10% level, and at the bottom of that table you can see that we're actually, our market cap is well below our cash backing at the moment. We've got just over $14 million in the bank. We've spent some of that IPO money developing the project to date, which I'll talk about, and yet our market cap's just under $13 million. Top 10 shareholders there, fairly retail register that we have. The number one shareholder is Navigator Resources. That's for a reason. That was the company that spun this project and company out. And out of the listing, they got stock in the company and kept 9% of it and did an in-specie distribution of the rest to their register. So why have we started with a 20% share price and now have a 10-cent share price only 6 months later? What I've tried to do here is just show the market in general and then the rare earth market in comparison to the market in general. Since the day we listed up until when I put this slide together a week or two ago, the Dow Jones has lost 8%, the All Ordinaries down 11%. The third row on that is the Bloomberg Rare Earths Index, which is actually made up of a whole pile of TSX and ASX-listed companies that have rare earth deposits, formally defined deposits, including Kimberley Rare Earths, which has Cummins Range, is actually in that index. And that's declined 47% in the same time. It's been quite indiscriminate across rare earth focused companies. And as you can see, Kimberley Rare Earths, no exception, lost 50% of its value along with every other rare earth company. Sorry, push the right button. Okay, this is that Bloomberg index. We listed right here where this vertical line is, right at the peak. And since then you can see that sharp decline across all of the rare earth stocks. Why have rare earth stocks gone a lot further than the market in general? 2 or 3 reasons. I guess the primary ones that I can see from all of the analysis that I've done is that, one, rare earth prices have fallen and the market's reacted quite badly to that, and that was after incessant rises, continuous rises for some period of years, as I've tried to show on this chart. And secondly, there has been a lot of pessimism in the last few months from the handful of experts in the rare earth space that are now doing forecast supply and demand predictions and showing oversupply is upon us in the rare earth space. And that's despite the fact that there's not one new tonne of rare earth being actually produced ever since China started to withdraw their export quotas. Just as I'm talking tonight, I'm making an assumption that most of the people in the room know a bit about the rare earth sector and the space. I'm not going to go into education about the rare earth suite of metals and what they're used for too much tonight. So I'm making that base assumption. Happy to take questions afterwards. On this chart, I've shown where Lynas Corporation funded the Mount Weld project, and this is where the prices were at that time. It's a very robust project. It was commercially viable at that point and was funded. Since then, the prices went up to here, and they've come down to here. The headlines read, rare earth prices have dropped by 50%, which they have since their highs. This is exactly the same chart, but with a logarithmic scale on the vertical axis instead of the normal scale. And for those that remember high school logarithms and exponentials, it basically concertinas the prices at $1 there, $10, $100, $1,000. This is the same chart, And you can see where the prices have gone, and this is where the drop's been, from over $200 on our basket price and rare earth prices down to just over $100. So it's dropped by 50%. It was only $10 a couple of years ago. This is a massive paradigm shift, actually, in pricing. Now, we in the rare earth space are hoping that these new prices are more realistic than what we've seen in the last period, because at these prices, most of the customer and the demand side was trying to find different ways to use other metals because it was unsustainable. So we've had an order of magnitude shift in rare earth metal prices. So I want to talk about Cummins Range now over the next few slides. It's a project that Kimberley Rare Earths was listed with, as I mentioned. It's a flagship project. It's located in the Kimberley region of WA. I've put a couple of photos on here for a reason. One, it has very good infrastructure in terms of a highway nearby, and you can see the red line here. It's actually Highway 1. It runs all the way around Australia. It's about 170 kilometres from our site, which is based just south of Halls Creek. It's on a pretty ordinary cattle station near the Great Sandy Desert, and I make that point because it's not near any community issues, and it has got no tourism issues. It's nowhere near the heritage-listed area of the Kimberley, which was up in the northwest part of the Kimberley, pretty much in this area up here. And this sort of shows the terrain with our exploration camp out there in the last few months. So if you're investing in rare earths, you have to make some decisions, because in the last 2 years, they've gone from probably 1 or 2 companies to over 200 companies purporting to have rare earth projects. Now, how do you distinguish between 200 companies and over 300 projects? The Technology Metals Research website lists over 300 projects. InfoMine lists 191. So we've tried to put them into a pyramid here and figure out which ones have deposits and which ones don't. You'll see that 85% of them are actually just raw prospects at this stage, and there was a massive investor confidence in the space, and hence that brings out all of the potential projects. There's only around 25 projects outside of China that have a defined resource in rare earths. Only 5 of those are in Australia. One of those is Cummins Range. So it's actually a pretty small field when you take it down to defined resources. What differentiates Cummins Range from some of the other ones? Well, we've got a known geology and a known mineralogy. Now, does that make sense? It does when you start to look into the textbooks where rare earths can appear. There are books about this thick written on the geology and the mineralogy of rare earths. Rare earths can appear in a whole range of settings. Monazite is one of the only minerals that's in one of 3 minerals that's ever been processed for rare earths, and it's where traditionally, it's a beach sand mineral generally, and it's where traditionally rare earths came from as the industry sort of evolved back in the 50s. And carbonatite hosts most of the larger deposits around the world today. So it's a known geology and a known mineral, and in fact it's extremely similar to the Mount Weld project, which is Linus's Goliath project over there near Laverton in southern WA. The carbonatite is actually a volcanic pipe that's come up through the Earth's crust and hit the surface. It's weathered at the top. This is what it looks like when you're looking down from the top. This image was captured by flying an aeroplane 20 metres off the ground over 7-kilometre runs. So you can see how flat the ground is out there because it didn't crash into any hills. And we've got this aeromagnetic image, and it shows this sort of ghostly image of what the carbonatite looks like with its magnetic highs and lows. It's the magnetic lows, which is the carbonatite, the highs, the pyroxenite, and within this we have this nice little rare earths deposit. If we look at that as a section now, so we take a slice down through the Earth's crust and look at it as a section, and those in the mining space will have seen 8 billion sections in their life. What we can immediately see about this one is it's a very shallow deposit. The rare earths have actually concentrated up in the weathered part of the Earth's crust, right in the top 100 metres. It's that weathering that's actually caused the concentration of the minerals. And if you can imagine an open pit mine here, we believe we'll get an excellent conversion from the resource that's in the ground actually into a mineable open pit because of that reason. I come from a nickel cobalt background and also some oxide gold background. And this is quite often the case in the Australian regolith, or the weathered profile, is that you get good conversion into reserves. So we can imagine a fairly simple mining operation similar to pretty much every other oxide pit in Australia. So mining is quite a simple proposition. I guess the other thing I'll point out before I leave this slide, This deposit actually daylights right at surface. We can dig into high-grade rare earths with the first bucketful. Okay, Navigator Resources, who had this project and listed it into this vehicle called Kimberley Rare Earths, did a pretty good drilling program in 2007 to find a resource to inferred status. We've just finished another 4,500 metre program in the last 2 months. Went up until the thunderstorms and the bushfires that were caused by the thunderstorms stopped us. And we've just finished about 4,300 metres worth of drilling. Released the first results, about 50 or 60% of them last week. We'll release the rest this week. They've just finished coming in from the lab and we're just digesting them. And what we're seeing is making us pretty happy. We're seeing continuation of the quality of this deposit. I'll just point out on this slide these very long intersections, 40, 50, 60 metres worth of rare earths at above resource grade. Our resource grade, I don't know if you picked it up on the last slides, is 1.7% total rare earth oxides. We've got these long intersections at 2 to 3% rare earth oxides. And within those long intersections, we have some very high grades. This is up there with similar to the high grades that Mount Weld has in their fantastic project. And small intersections, but certainly several benches in width in some cases of very high-grade rare earths to tap into. We're still finding from the assays that we have already got that the resource is still open to the northwest and at depth in that corner, so we haven't quite found the edges of it yet. So we'll have a little bit more to go next year. But that doesn't stop us getting on with the job. The resource that we've got there now has 120,000 tonnes of rare earths oxides in the ground, which was equivalent to last year's global supply. We've actually got enough for at least a 10-year mine life at about 4,000 tonne per year production rate. This drilling program may grow that, and that will be cream on the cake. So that's mineralogy, geology, mining, and some of the grades that we're looking at. The complexity in rare earths, as anyone who's been following the space will know, is actually in the processing. I'm a metallurgist, and I think I've found the doozy of them all in terms of processing after nickel, cobalt, laterites and refractory gold. I've tried to simplify here the process route from taking a rare earth ore from the ground and putting it and getting it into products. Remember, there's 17 metals there. Some of those will go into oxides, carbonates, chlorides or alloys, and they end up being sold to end-use customers. They have to go through a series of stages, which I have grossly simplified here for the sake of a slide. And with monazite, this part of the processing is actually quite mature, quite well-known technologies there. That's the easy bit. It's the actual concentration of our lower-grade resource, about 1.7%, is the difficult part. So what we're looking at is froth flotation technology. This is technology that's normally applied to sulphide-type mines. This is an oxide deposit, so it's a lot more difficult. Lynas Corporation have spent many, many years developing their oxide flotation to the point where they've now commissioned a concentrator. It's doable, and they've done it. They had to go through their hard yards as first movers. We're second movers. We're going to take advantage of some of that hard work. But we've actually got flotation test work commenced in Adelaide this week on the 2007 drill samples, and we're about to compile a whole bunch of composites from the latest drilling for a much bigger program, which will take place over the summer. The timeline for getting this project into a mine, this shows a 6-year program. We are here right now, at the end of 2011. We'll deliver our first scoping study or a preliminary evaluation in July next year, which will test the commercial viability on a bunch of assumptions, but some real metallurgy, which is probably the key question mark right now. From that, we hope to get the momentum to go into, or at least the mandate to go into a pre-feasibility study. We've got enough cash to get us well into that. And that will take us, I'm allowing 18 months there to get us to a pre-feasibility study. That should get us down to a plus or minus 20% odd sort of accuracy rate for a study. BFS, another 12 months, bring you down to the 10 to 15% range and have your contracts all lined up, construction ready to go, engineering out to a certain point. Financing and construction over 2 years takes us into production towards the end of 16, 17. Now, when I've shown this to some of the stockbrokers around the traps, their eyes glaze over and say, "Oh, Tim, we're just interested in this couple of months here. You know, when's the stock price coming up?" Rare earth projects are long projects, and some of the players that have been out there as first movers, you'll see, have been out there for a number of years. And I just wanted to point that out on the next slide. This is Mount Weld. Mountain Weld has commissioned a concentrator in WA, and they are finishing the construction of their downstream refinery in Malaysia as we speak, and plan to be in production mid-next year. Their project is a massive, high-quality rare earths project. It was discovered in the 1960s. Ashton Mining attempted to get it into production over 10 years through the 90s, sold it to Lynas. I started this timeline here back in 2000 when Lynas first vended in, and you can see a 12-year program for them to take it from what already had 10 years worth of metallurgy and mucking around in resource modelling done on it through to where they are today. If I overlay Cummins range over the top of that, a 6-year timeline doesn't seem too bad. Now, I'll make the point that it wasn't all just technological development for Lynas. There was not a lot of interest in rare earths for a lot of this space, and Lynas Corporation struggled to get investor confidence in the market for a lot of time. But for a large portion of this period was technology development. We're going to concertina all that in. How can we do that? As I said before, we're second movers. We have an emerging and maturing market outside of China in the next 5 years. We're already seeing evidence of that now, finally. But the first movers had none of that. There was no market outside of China. So the Alkanes, Arafura's, Lynases have had to go right from mining through to talking to Toyota and Siemens end product users because there was no market in the middle to deal with. So that's a comparison of the two timelines. So I'm just going to summarise. I've given you a snapshot of the Cummins range deposit, and I just want to summarise a little bit about the companies to give you some takeaways to go away with. Kimberley Rare Earths, brand new company, lots of cash in the bank, enough to get us well through to the end of next year with a lot of development work on this project. Highly experienced metallurgical team and geology team, and development focus. All I've ever done in my career, as you heard when I was introduced, is actually work in operations and project development. That's all I know how to do. I'm not an explorationist and I'm not a share market miner. I'm a developer. The rare earths market prices, as I showed in those couple of charts with the log scale, is finding a new balance in a real market outside of China that will have hopefully free market fundamentals applied to it so that customers and producers can survive in the new world. Supply, well, supply, nothing's changed. China's supply is still shrinking. Every half year they release new export quotas which are smaller than the last, and there's still no production from outside of China. So the supply side hasn't changed one iota, and the demand side is exponential. It has been historically. The demand projections I'm seeing from the experts actually have nice straight lines because it's easy to put the ruler on and say 3% per year or something. But historically, demand, and as Richard pointed out, demand, when the metal's there, it drives these new technologies. The demand is exponential, absolutely exponential. I don't see any reason why that will change as these products come into the market. So we're a true believer in the rare earth space. We're going to stay in it. On top of our Cummins range asset, which as you've heard is quite an advanced asset and it's going into development, we've recently ventured into a grassroots heavy rare earth project in Mozambique called Malulongwe. It's a pegmatite hosted project, quite exciting. It's early stages, so we're not sure how big it might get, but it has a mineral called xenotime in it, which has more of the heavy rare earth side in it. And we're going to get a geologist on the ground in the next few weeks up there. We've only just finished legal due diligence on that. In the last few days we announced the finishing of the legals. We're actually reviewing a range of other projects at the moment, and my plan is to have a pipeline of projects. As a real development company, you must have a pipeline of projects ranging from grassroots through to advanced development and production. So that's the strategy, and my plan leading this company is to build that over the next 5 to 10 years into a rare earths focused company focused on exploration through production. So with that, thank you very much.